Welcome back, everyone, to episode 4 of the Daily Dollar podcast. I am your host, Caitlin McCready, here with my other host, Art Morrison III.
Art Morrison III here.
He had a couple things to take care of.
Yeah, because I just talked too much in the last episode.
Sips of... Oh. Speaking of...
This is like probably the most valuable one so far. What is it, episode 4?
Episode 4, and we are talking about OPM, other people's money.
Other people's money. So, I'm sorry. Did we do the intro right? It's the Daily Dollar.
Yeah, I already said that.
Our podcast, all right.
You forget. I've done it every single episode so far.
All right, whatever, dog.
We are talking today about other people's money. What does that mean?
You asking me?
Yeah, what does other people's money mean?
Yeah, so other people's money can mean so many things. It can mean other actual physical people's money. It can mean the bank's money. It could mean any different source of funding that is other than your savings or your 9 to 5 or your sweat equity that you put in, right? Other people's money. I love the term other people's resources, right?
Okay.
Because when you're dealing with private syndication, there's so many different parts that go into what we're going to talk about today, which is like fixing and flipping specifically, right? You got contractors, you got attorneys, you got credit, you got lenders, you got cash or capital, right? So you want to, or our job, right, as a real estate manager or syndicator is to get all that and make something happen. I can do that pretty easily leveraging my own resources. We all can, and when you think of real estate, you usually think of that. Like I need cash, I need credit, I need blah, blah. But the true talent and how we've been able to make so much money is because we've learned to do it with other people's resources or other people's money. And it's all leverage. The main key is leverage.
This is along the lines of when you see online people saying how you can get into real estate or flip a house for no money down.
Right.
This is what we're talking about. Other people's money.
Yep, exactly.
Okay.
I mean, so when you simplify it like that, it's like, okay, where do I sign up? But at the end of the day, in order to do real estate with other people's money, the first thing you got to do is create a brand, right? You have to, not just any brand, but a trusted brand, right? So, I mean, Kate and I, we've experienced such success so fast. And that's really because of how good our branding and marketing is. If you were to go to our website or Instagram page, you're thinking it's probably a much larger company it is. You're thinking about, wow, how professional are these two? It's very well done. Nothing looks like we did it on a cell phone, right? Nothing, like we just take it to another level. And because of that, we've been able to essentially galvanize investors, people who want to invest into our system, our business, and our projects that we have, right? Our real estate projects.
So is this strategy for everyone, would you say?
Yeah, so I definitely think the strategy is for everybody.
Okay.
Because we did it with almost no experience. I mean, I think we had 4 properties, 2 wholesales, and 2 buy and holds using FHA loans, which we talked about in the last one. Anybody could do these, right? We had 2 house hacks and 2 wholesale strategies under our belt. Right. And it was time for our first flip. Now, the 2 wholesales that we did, we stayed in, so we were mentored through them, and we had a little equity play in them and made some money on the back end of the flip. So they were technically our first 2 flips. But the first one we did with OPM, other people's money, we leveraged those other 4. Like, hey, look, I'm only 28 years old, 29. I got 2 properties under my belt. I got 4 properties under my belt. I want to buy this one, but you don't go to them and say, I don't have any money. But you say, hey, listen, I have the property. I have the financing, I have the contractor, I have the systems, I have the team, I have the knowledge and understanding. And then I'm going to repeat it again, I have the property, right? That's the big leverage.
Yep.
I have the project, I have the deal. As a master evaluator, here are the numbers to the deal. This is going to make a projected X amount of dollars net after we pay taxes, after we pay utilities, after we pay water and sewer, after we pay commission. This is the net amount, and I'm willing to give you X amount of that amount of dollars if you fund this deal.
So this is where deal evaluation is extremely crucial.
Yeah, for sure. I mean, like my ability to deal evaluate, I won't say it's second to none, but my ability to deal evaluate and run the numbers is very, very strong. And that's where my talent has been. I've a lot of the people that I know in real estate, I surpassed really quick because I know how to crunch those numbers. I know all the formulas, I know the math, and I wouldn't even consider myself good at math.
Right.
But it's like that combination of understanding real estate, remembering all of the different.
Yeah, it's not so much having to be good at math. It's
Yeah,
more
you gotta
just
know the perks of
understanding.
real estate. Yeah, if you know, like if you know all the wins, equity is a win, appreciation rate is a win, cash flow is a win, profits obviously are a win, low cost is a win.
Right.
So when you know all these and then you know your formulas, ROI, cap rate, IRR, ARV, LTV, if you know all those, you simply can, or have more of a talent than the next person to look at a deal and say, okay, this is a good deal, but forget about it being a good deal to me and you. What are you making that face for?
No, I'm listening.
Oh, forget about it being a good deal to me and you, but we know how to package it to make it a good deal to an investor or the other people's, the OP and other people's money.
So let's throw it back a little bit, because the first time I ever heard about using other people's money to flip a home, when I've never flipped a home before, that made me clench my butt cheeks a little bit. It stressed me out because I don't like owing somebody $5, let alone $25,000. So tell me why, and I know why, but break it down for somebody who might be afraid to even attempt to get those funds from an investor.
Our issue in the beginning was our posture. When you posture it like you're borrowing money from someone, then yeah, it's butt clenching. But when you posture it like, yo, I'm giving you an opportunity to make money. There's 8 billion people in the world. I'm asking you for, let's say, for example, $20,000 or $30,000, and I'm telling you I'm going to give you 40 back. This is an opportunity that you don't just walk into.
Right.
The bank is jerking you, giving you 0.03% of interest on a year. Your 401k or mutual fund on a good year is giving you 12%, 14% if it's a home run of a year.
Right.
I'm here offering you 18.5%, and it's collateralized by an actual physical tangible asset or property.
Understood.
So it's like, it's that posture. So when we first started, I didn't have that in me. Like,
I know that stressed me out a
bro,
lot.
listen, you know what I mean? It was like, I didn't have that. It was like, yo, you give us 20 grand, we're going to give you 30% returns, which is high, but we can give you that because this deal's going to make $100K.
So
that posture don't sound too bad, right?
Right.
But it is bad because the other person thinks that they're doing you a favor. They're not doing you a favor. You're doing them a favor. You're the one who does everything. You almost should charge them a fee for doing it.
Yeah, absolutely. Agreed. But people who are going to give you thousands and thousands, tens of thousands, hundreds of thousands of dollars, naturally they do feel like they're entitled to answers and like a level of control, right? I think one of the biggest obstacles we've had to overcome, and it's not a big obstacle, honestly, to be honest, but the biggest question, I guess, that we get is, what if something happens? Like, what if you don't make those returns? Like, what if the house burns down? You know, like, where's my guarantee there? So how do you handle that objection?
Yeah, I mean, you just try to mitigate it. So first of all, if the house burns down, that's what homeowners insurance is for. The way I explain it to people is, hey, listen, you're not buying the whole house cash. So relax, bucko, big money bags over here. You're putting down a percentage of the down payment. That means that a bank or a hard money lender is lending us, let's say we get 20% down from an investor. That means somebody else is giving us 80%.
Right.
So in order for them to give us 80%, any bank in the world is going to protect that investment. So if the bank deems it a good investment and approves the loan, that same underwriting can be used for what could be considered a bridge loan or whatever you want to call it, but the other people's money, the same strategy. So if, whatever capital, whatever bank says, I'm going to give you, if the property's $100,000, they say, I'm going to give you 80, you got to put down 20, and I'm going to fund 100% of the construction costs. And I go to somebody else and say, yo, I need you to give me 20 grand. Now I understand from a posture perspective, like, bro, you can't complain about 20 grand. I go to the next one, the next person, because the bank is giving me 80 grand. And they're protecting their asset by forcing us to have homeowners insurance.
Right.
They're protecting their asset by forcing us to sign specific, paperwork. They're protecting their asset because they reserve the right to take the house, right? If we don't pay, and so on and so forth, right? So in regards to protecting other people, you literally just steal the measures that the bank takes and you offer that to the other people, meaning like, hey, here's the percentage of interest we're going to pay or the amount of equity you're going to receive on the deal.
Right.
Here's the insurance policy that you and I are both on so that we are both covered. Here is the, what else? What are other ways that we use to protect? I mean, obviously it's the tangible asset. So it's like, hey, listen, if you give me the money to flip the house, but the house doesn't sell, you have that equity in the house. So that means if we keep it and make rent, you're entitled to that rent roll. And then if we sell it in 2 years, you're still entitled to those profits because it's a tangible asset.
You can also always refinance them out.
And refine it. We can refine it. Thank you. That was the other one. We
Yeah.
can refinance, get your little 20 grand up out of there and replace it with some of the equity that we built in from the construction. Or on top of that, bro, take your little 20 grand, we'll replace it with somebody else's. That's the other thing because we're a company, we're a system. We're not just a couple that flips houses.
Right.
Right, and you're letting us borrow 20 grand. No,
so that's the posture that you have to come with.
More so than posture. Even if my posture was wrong, how long is our line of people to invest in our projects right now? There's like 21 people.
Yeah.
So if you got 20 people lined up, it's like, yo, if you're uncomfortable investing 20,000, here's your 20,000, and we'll go to the next person in line who is willing to invest and not be nervous, right? So it goes both ways. It's like, bro, like we have the money. I have the money personally. We have other investors who will replace you. We can refinance. There's equity in the house. There's so many different strategies that we can use to make sure that your little 20 grand is
Gets
safe.
back to you.
Exactly.
Yep. So my favorite thing about the OPM strategy is that it allows us to be in way more properties at one time than
that's why you do it.
What we would be able to.
100%.
Yeah, I mean, it makes sense to us, but not to everyone.
I mean, even if we have, this is how I explain it to all my investors. If I have $500,000 in the bank and I wanted to flip a house all cash, I probably could flip one house, maybe two here in New Jersey. Maybe. But I would have to still even probably get a construction loan, right? But if I'm in a cheaper section of New Jersey, I could flip two houses, buying it and with the renovation costs. By using hard money or any sort of loan from an institution or a bank, now that $500,000 can get me into, let's say if it's $50,000 down per property, let's say 25 even. That $500,000 can get me into 20 properties. Just like that. 20 properties just by using hard money. And then, right, if I use other people's money in cahoots with the hard money, that $500,000 can get me into, instead of 20 properties, probably 100 properties by developing a system. So by doing so, that's also my favorite thing about other people's money because it gives us more experience, more opportunity. And honestly, you build your resume much quicker.
Yeah.
It's like a snowball effect.
Absolutely. Couldn't agree more.
So with the other people's money thing, I mean, I know it's obviously a podcast, but how do you, we've talked about this in the past off the air. Is your goal ultimately to not use OPM, or are you more comfortable with it now where you're like, nah, this is just our business?
Well, I'm way more comfortable on it now. Yeah, that's really it. I'm way more comfortable with it now.
We were like, I can't wait till we have our own cash and we can just do that. We don't have to answer to investors. But like, nah, it's all posture.
Well, yeah, that's what I was going to say. I know we've spoken about it offline. But yeah, it's as long as you position yourself a certain way and carry yourself a certain way and have that conversation with somebody.
A brand to a certain strength,
Yeah, so like you said, we have a line of 20 plus investors who are ready to give us money at any point. So if anyone decides to give an issue, and this isn't to big up who we are or anything like that. This is literally because we are doing other people a favor as far as we're not just flipping houses, we're flipping money. So
a quick recap. Let's talk about exactly what OPM is or how you use the strategy. I guess we kind of skipped that part. But like, so you leverage hard money, which will give you, some will give you up to 90%, but let's just say 80% LTV, which means they'll lend you 80% loan to value. That means you got to put down 20%. And they'll also fund 100% of the construction, and they charge interest. So what you can do for that 20% is you can essentially have an investor or a partner come in, provide the other 20%, and then you give them either A, a piece of the pie, or B, you can give them, let's say, the same interest that the bank is charging you, right? So now you got 100% financing. So like our bank, let's say they charge us 9% annually, we can offer a partner 9% annually. Hey, invest $20,000 into this, I'm gonna give you 9% back on your money once the deal is done. And most people will be ecstatic with that because their money's actually working and they get the experience of being involved in the flip. So it's all about leveraging different parts of the deal. But what you're doing is being creative, bringing in partners, and then that allows you to do ultimately more deals. I know people who give 50% equity. I know people who give 33% equity. I know people who give preferred returns or like a fixed interest like we do, and do promissory notes. I mean, there's so many different ways you can leverage it. It really just depends how big you want to scale.
And it also depends on the deal and how it's structured.
That's the other thing too. Yeah, our percentages fluctuate. Like we've had deals where we make 125,000. We've had deals where we make 25,000.
Right.
So obviously you got to measure the amount and make sure that it makes sense for the investor. But if the investor is smart, they understand that the more they invest, the more properties that will come their way, and they could keep going. So like, yeah, they might make 20,000 on this property, but they might only make 6 on the next one. But that's 2 properties though, and then there'll be a third, and then there'll be a fourth, right? So if I come to you with a deal that'll make 25 grand, you say yes, and I come to you with another deal and you say no, I'm probably not coming to you for the next deal. Somebody's gonna take your place. So the investors, is in their best interest to trust you, but you gotta build that initial trust in order to get into the business of using other people's money. And this isn't something new. It's kind of something that everybody's teaching online, using the word OPM because it's simple and it's like other people's money. But this is a system that the wealthy have always used in business, in hedge funds, crowd funds, real estate. It's all the same concept, right? Like Apple going public, they're using other people's money to fuel and grow a business that's already proven, and then paying everyone back in the form of dividends and returns, and obviously their stock increases. So other people's money, I absolutely love it. We didn't even talk Burr strategy.
Yeah.
Well, we kind of did. You said we could refinance, pay them back, and then now you keep the house.
Yeah.
But
that deserves its own episode.
That's a whole nother episode.
Very, very popular strategy.
Yeah, absolutely.
The fact that it's called Burr means that it's been very widely marketed and.
Burr. Yeah, people have hoodies with Burr on it.
Yeah, yeah.
Gucci Mane hoodies. Anyway.
We are past the 20-minute mark, so another long episode. But
Daily Dollar. We just gave you guys like 3 long episodes, but these are episodes that like really have a ton of value.
Very deep strategy.
We wanted to kick the freaking podcast off right. It's episode 4?
Episode 4, yep.
4
we had the introduction, and then 2, 3, and 4 were all strategies.
Well, look, let's get out of here. Where can they find you?
They can find me at the Kate McCready on Instagram. They can also find us collectively, our company, at United Home Relief on Instagram as well.
What's on that page? I love how we interview each other. What's on that page, Kate?
A ton of value. We have infographics. We have TikToks. We have in the field videos. You name it, we have it.
Dancing TikToks?
Not dancing TikToks.
Right, so
informational value.
Information. Yeah, you
yeah,
got
valuable
that.
TikToks.
We got TikToks. Like, all right.
I mean,
12.
it's all. Well, we could have some humorous.
I think my next TikTok is gonna be a dancing TikTok.
All right, you go for it. We do have a dancing TikTok. Or you have a dancing TikTok.
That's on my page.
On our property. Where can they find you? Where can they find that dancing TikTok?
Art Morrison III. Art Morrison III at Art Morrison III. Don't forget, visit the website, UnitedHomeRelief.com. I before E, guys. United Home Relief. That's where, honestly, you can get a lot more of this information. I mean, like Kate said, we want to have a lighter podcast. So sometimes we'll be on here joking and playing around so it's not so freaking stiff. And
we want to get into even the dynamic of our relationship and working together within real estate and how that
kind
looks.
of stuff. So if you're here looking for like strict information, like, bro, go sign up for our course. It's like less than $200.
Yeah.
Go figure it out.
But we do promise every episode of this is going to be valuable in one way or another.
We promise, even if it's just in the form of making you laugh.
Yep. Or
anyways.
Motivate you.
Or motivate you.
So please, if you have any questions, comments, concerns, or requests as far as what you want to hear from us, shoot us a DM on any of the pages, and we'd be more than happy to hear from you.
I didn't talk that long that time. You talked long. You had questions.
Yeah, I got to stimulate the podcast. I'm the host here.
Ooh. All right, cool. Guys, Art Morrison III here.
Kate McCready here.
Thanks for watching and listening to and tuning into. Oh, don't forget to like, share, subscribe on YouTube. See, we always forgot.
Yeah.
YouTube, Spotify, Apple Podcasts, and anywhere you listen to podcasts. Like, share, subscribe with friends. We want to grow this thing.
Yeah.
This is my 4th podcast, and I think this one's going to stick.
This one feels good.
It feels good.
All right.
But anyway, thanks for watching The Daily Dollar. Catch you guys on the next episode.
See ya.
Peace.